Hello, friends, and welcome to another episode from Easy Investing. Today, our focus would be on individual retirement accounts or IRAs. No matter what stage of life you're in, it's never too soon to start planning for retirement, as even the smallest decision that you make today can give a big impact on your future. While you might already be invested in an employer-sponsored plan, an individual retirement account or an IRA allows you to save for your retirement on the side and also potentially save a ton on your taxes. There are different types of IRAs with different rules and benefits. Our focus would be on comparing between Roth IRA versus a traditional IRA. A Roth IRA and a traditional IRA are both good retirement accounts to consider, and they both offers many investment options as you plan for your future. However, there are several key differences to keep in mind when determining which account makes the most sense for your particular needs at this particular moment of your life. Now, let's dig deep. A Roth IRA, it allows you to make after-tax contributions, which means you already paid the taxes for that amount for this year. It's best suited for an individual who expects to be in a higher tax brackets when he or she starts taking withdrawals. So let's say after 5 year or 10 year or after the age, by the time you are 60 years old, if you expect your tax bracket to be higher and you would earn high, then it's best suited to have an Roth IRA at this moment of time. Now let's look into the traditional IRA. A traditional IRA may allow you to make pre-tax contributions. It's best suited for an individual who expects to be in the same or lower tax bracket when he or she starts taking withdrawals. The key difference between a Roth IRA and a traditional IRA is whether it makes more financial sense for you to, option 1, enjoy tax-free withdrawals in the future, or option 2, take advantage of tax benefits today. Based on your financial aim, you need to go decide between a Roth IRA versus a traditional IRA. Now let's dig deep into the differences. As the chart above states, the Roth IRA contributions grow tax-free and there are no current year tax benefits, whereas for a traditional IRA, your contributions grow tax deferred. So at the time of your withdrawal, you will have to pay for taxes. However, if you will get an immediate tax benefit. So one example I would say is if your tax bracket for this year can be changed from one slab to another based on the $6,000 that you invest in, then I would recommend that you go ahead with the traditional IRA for this year, and you will have to evaluate between Roth versus a traditional IRA every year based on your financial priorities. Now coming to the next angle, it's the contributions. Roth IRA, we contribute from our after-tax dollars, and the maximum contribution eligible as of 2021 is $6,000, and if you are over the age of 50, giving you a boost, you would be able to contribute as much as $7,000, which is $1,000 more than a regular user. The Roth IRA, the contribution eligibility for a Roth IRA is limited by certain income levels. So if you are more than certain income levels, you are not eligible for the Roth IRA, but there is something else known as a backdoor IRA, that thing which we can cover in a subsequent video. And there is no contribution age restriction for a Roth IRA. Now coming back to the traditional IRAs. The traditional IRAs, as we discussed, the contributions come from your pre or after tax dollars. It can be any. But typically people go for the pre-tax dollars. The maximum contribution for 2021 is limited to $6,000, and if you are above the age of 50, you can go up to maximum of $7,000. There is no contribution eligibility limitation. So anyone with an earned income is eligible to set up a traditional IRA. There is no limitation on your income levels. And similar to Roth, there is no contribution age restrictions as well. Now let's move on to the third angle in which we compare between these IRAs, which is the withdrawals. Roth IRAs are penalty and tax-free after 5 years and age 59 and a half, whereas for a traditional IRA, it's penalty-free but taxed as your current income after the age 59 and a half. So it will be penalty-free, but you are still paying for, you will be taxed. One another aspect is the mandatory distribution. There is no mandatory distributions in the Roth IRA, whereas for the traditional IRA, after age 72, you will have to choose for a mandatory distributions. All in all, your key takeaway is that if you would like to enjoy tax-free withdrawals in the future, you should go with the Roth IRA. And if you'd like to take advantage of the tax benefits today, you should go with the traditional IRA. Hope this video made sense, and let me know your honest feedback as comments down below. Love you all.